And a very good morning to everyone. This is the Euro Trade. I'm your host, Marcus Stalker D. If we're meeting for the first time, I've been trading for 18 years as a commodities trader. So we're going to have a look at what we have today for silver and for natural gas. Maybe even, I don't need this. Maybe even have a look at DAX, because that might be setting up for a nice trade as well. But let me see. So I did pass one of the combines yesterday because of silver and natural gas. Natural gas is the one that I took during whatever that was, fast markets, I think it was. And then I did another silver long, so all of that pushed it into the profit target. So that is now waiting in the wings because I cannot have an XFA while I'm live. Alright, so let's see what silver is doing. At the moment, we're pretty high up on the value area distance from the open. The distance is quite large, so it's 1.8% from the value area. That's a little bit too high for mean reversion. So I'm just going to pop in the fixed volume profile for COMEX. Let's do that. So this was the start, and then we go to my 9 p.m. So you can see we're pretty far out. So this whole distance is 1.8% from wherever London opened. And I'm going to say this again, a London session this early on tends to not be the time of day to start your intraday swing trades. So this is why I like to focus on the LME, usually about 40 minutes into the LME is when I get my setups, or alternatively somewhere around the Euro close, which is much later in the day. But the levels that I have on here, they stay throughout the day. They do not change. This is for the value area from the previous day. And let's now mark up the chart with the levels that I do every single day. So at the moment, the ADR is at 52.20. So a bit higher up. Then we have the ADR low. Located down at 49.56. We already have the value, so I'm not going to be marking that because we have the volume value. And full disclosure, I do prefer the TPO volume value, TPO value instead of the volume, but they are pretty similar. I just found that the TPO value area tends to be a little more accurate for some strange reason. Right, so DAX has a level down at 23,160. That seems to be having a little bit of a problem. Now, let me show you DAX. So DAX opened below value. Let me just remove some of these and move them. This is Asia high and Asia low. Typical smash through the high and then a reversal. This is something that DAX does quite significantly at London Open. Usually smashes through the overnight highs or lows, which would be a better setup, and then reverses. Pretty large downside move. And in December, in actual December, the equities will be starting their rollover. We need to be a little bit more careful, but at the moment, I would be interested in some longs after 4 down days. Now, there could be a case of them waiting for the NFP release, and I think we have PPI or something on Friday. But yeah, so at the moment it's trying to fail the auction. I'm not seeing much commitment yet on the tape. So I still need to see some consecutive bubbles there with slightly larger volume. As it stands right now, this is a range created from the previous 30-minute time frame. So you can kind of pop in a thing like this. And when it comes to the initial bounce sides, it's enough. And here I also have the spread. So I have the bid and ask. That's what these little lines are that are jumping. They can sometimes give you an indication that there's some bulls or bears around, depending on how that line is dancing. But yeah, I want to see a little bit of commitment to the upside before I enter the DAX trade. And it will be a failed auction. So yeah. At the moment, it's all a bit lackluster on the tape, so let me just show you. Mildly positive delta, but these bubbles are just not large enough to give me conviction. They're all kind of very split, almost like a tug of war here. This looks better, but I need to have like 3 or 4 consecutive larger volume bars on the bid to kind of lift those offers. Desmond says, how are you doing in your live account? Hope it's faring better. Trading silver in your live account too. Yeah, occasionally. Yeah, occasionally. It depends, obviously, on the setup, whether I took a payout, and all of that good stuff. But yeah, for now, I'm just sticking to smaller positions in there. And only trading towards the end of the day, really, because if you've seen what natural gas did, it was pretty quiet. So let's have a look at this. So it was very, very quiet. We just had like one move down and then nothing until the euro closed. And then finally, before lunchtime in New York, they started to fail the auction, and there was a GEX2 level at 425. So I took a failed auction and I basically ran it up to 3R, sized up a bit towards the end once I saw some commitment there. And yeah, so it's one of those things. Sometimes natural gas tends to be quiet and then you have to limit your trading. All right, so we have about 3 candles on DAX, so let's try long there. And only aiming for 2R, so the entry there with the spread, because it does have a bit of a spread, is 23,184. 23,184. So if you look at the difference on the tape now, so that's kind of what you want to see. You want to see a commitment with some volume, bigger bubbles, green, right? That's the, not just one. So here, if I go back, it's all a bit iffy, right? And then they finally make a commitment to do something. And then you need to push. So yeah. And on the lower time frame, it needs to break this structure. And we also have some VWAP from Globex at 23,207. So that needs to be reclaimed. And then we have something. But so far, that's looking not too bad. And again, more commitment to the upside. nothing too much in the way of the dome on the size. Now the target for this DAX trade would be value low 23,300. And right, so let me go back to silver now, since we cannot trade DAX on Topstep. I'm going to keep my target at 274 actually, because that's kind of the top of the initial balance. I'm just going to keep that. Yeah, so let's have a look at some options levels. At the moment, gold is hitting its gamma wall at 4,100. We do have positive gamma, so it's very likely that they kind of chop around here a little bit. And then the next level on gold, because they're super correlated, it is a factor of 1 correlation between silver and gold today. But gold is not going over the gamma wall, however silver is. So we had the gamma wall up at 51.50. So 51.50. That will become the orientation for today. And then we have GEX2, which is another level that I like to look at 51.20. Along with some concentration of smaller GEX levels around 51.30. Right, that DAX trade is being pretty sweet so far. So let's see what happens at VWAP. It could dance around VWAP a little bit and then decide, so we'll see. It might not. It's an equity index. But yeah, failed auctions are pretty sweet on the long side on equities. So they'll probably fight around VWAP a little bit here on the DAXy. Just gonna put my phone on mute. Right, so are we gonna have another outlier day on silver? Maybe. Maybe. And then if it smashes through GEX2, manages to tackle that area, the next area that I would look for would be a takeout of the triple bottom looking thing on the 5 minutes. So we have these areas here, along with Globex VWAP, and also 5100 is a round number, and that's also where the put support is located. So that will be the ideal longs situation. Then matching all of that up with some other time frames. We also have the average session range low for the London session sitting around 51 as well. So again, that would be a good continuation trade. I don't like doing breakouts. They don't really work for me. So right now we are holding above the Asia high and continuing to push, but I want to wait for a good pullback, at least to the call wall. And then maybe we have something. But I like the fact that it kind of gave me a move higher up. So now I have some space for that pullback to make sense. And then we can trade towards the ADR high. Tori's asking me, don't mean to talk about the weather, but is it snowing outside? Not just yet. Like, we're pretty south down, and then where we are, there's some sort of a valley. So the clouds tend to kind of dissipate very quickly. I know that it's snowing in Kent because my phone was just going off because we have some group chats. And apparently it's snowing in Kent. So I didn't see any snow outside the window this morning when I was getting ready. Although I don't know, maybe it is. Oh, hold on. Yeah, apparently it is snowing. Yeah, shows you how much of a hermit I am. Because obviously in the morning I have to like get ready and stuff, and I don't necessarily peek outside. But when I got up around sort of 7:30 this morning, there was no snow. It was just a bit wet. But now, apparently that's changed. So whilst I was putting my face on, we have first snow. It's going to be beautiful here. I still need to do the new house tour video that I've been planning. So maybe I can do it when it's snowing, because it's such a lovely area. It's like so peaceful and like absolutely gorgeous outside. Right, so we're trying to show more strengths from the DAX trade. So we now need to reach almost to the opposite side of the initial balance, and maybe a little bit more, but I will be taking that off at 274. Yep, they're still pushing. We have some order blocks that have appeared now. Let's see how they go into them. So 274 is my target. Slight pause, but they're still trying to push. Like the consecutive bubbles are mainly green. It's just the volume here needs to step in. So let's see whether some of these 10 lots go away. I would like to see them disappear. But at the moment, they are the largest orders on the tape. Not big by any means, but yeah, they're trying to fight. So I'm going to give it a bit more time. Maybe might shave off one here. All right. So I took one off, so 250. And then I'm going to leave the rest to run. Just purely because of that big big reversal, I don't want to not have anything to show for. And then this will be like a bit of a buffer trade on DAX for Wednesday. And by doing that, like clipping one and then leaving the rest to run, you kind of end up with 1.5 R. But I always prefer to partial and, you know, start slow and then scale in if it's like a really good setup, which this one really isn't. And then to kind of shave it off. But I never really trail my stops. I don't think that's, for me, for my style, since I hold my trades much longer, it's not very prudent, because, you know, the retest over the day, if you're going to hold something for like 3 to 4 hours, you will get a retest of the level, right? But as long as the absolute low of the structure that you're trading, and in my case it would usually be some mean reversions or failed auctions, which are a form of a mean reversion, I suppose, you want those lows to stay. So my stops are usually below the entire structure, like this. And then at weird numbers, like 23,139. So it's away from 150, and it's got quite some room. Yeah, DAX is a beautiful trade. And now if we're going to stutter around, and we kind of start establishing some sort of a range, which I don't think is happening at the moment just yet, then it gives me an opportunity to clip the rest of it, and that's it. But yeah, so partials for me are much better of way of trade management than the whole moving your stops and messing up the structure. Because I'm quite pedantic with market structure, so if my trade doesn't look right structure wise, I'm very uncomfortable. And I think this is why the trailing of the stops for most people who are not scalpers is not going to work. Like if you're a scalper, that's fine. You're not going to be in a trade long enough to experience a retest unless you're totally wrong on the trade. And presumably you're going off some kind of momentum, or maybe you're taking out the orders, bigger orders on the dome, trading ahead of them to take that liquidity. You know, there's many ways of doing it, but I don't like scalping personally. Too labor intensive for me. I'm a bit of a lazy trader at this point. All right, so silver, big selling wick here. So let's observe how the next 5 minutes behaves. But remember, for silver, I want to see 51.50 at the very least before I get involved. Now, alternatively, let's say that this does go into some crazy upside move in a crazy day up. I would consider backtest of ADR if we go through it and then come down to it. Go through it, come down to it. Break out some freestyle. So I would consider 52.20 to be another kind of long opportunity or an orientation point. So if we start to melt down through it, then obviously that's a short. But I don't know whether I'm going to be getting my silver trade during this stream because I want to pull back. I'm not getting involved here. How do you find call wall and put wall? So you can look at the options chain. So for example, I have an interactive brokers account as well. So you can pull up an options chain and look at where the larger levels of interest are. Now, depending on the size of the open interest at those strike points, these levels are named different ways. But if you are open to paying for a service that effectively makes that easier, it's a company called Mon-Thurs. I did a video on how I use their levels. All right, DAX pushing even more. I mean, that's a beautiful chart on 2 minute. This is a 2 minute chart. So yeah, moving average about to cross VWAP, which could be a sign of strength in the lagging way. So, you know, sometimes I will use the MA, 9 EMA with Globex VWAP on a 2 minute time frame for a mean reversion away from value. So, you know, if we're opening, like let's say RBOB opens at like 1% away from value. So I will drop down or above value because I would be shorting RBOB in that case. And then, you know, you see the VWAP crossing over and the price is breaking structure as well. That's like another little indicator that the volume is picking up. But I prefer order flow tools. So yeah, if you go on my channel, Market Stalkers, there was the video that I did one before the last one. So the last one is bookmap settings. And then the one before that is all about how to use call walls, put walls, GEX2, GEX3, GEX1, what to expect from them in negative or positive gamma. What is negative or positive gamma? What do the market makers trying to achieve? How does it all work? And it's the basics, but if you've never dealt with the options levels, and I've been dealing with them probably for 18, 19 years now, because I always, even when I was a swing trader in Forex in Euro dollar, I was always using some kind of a options level for my post and my cut trades. So the larger the option, the more chances of it becoming a magnet. But there's a different behavior during positive and negative gamma. So what's positive and negative gamma? Positive and negative gamma is is effectively how the prices are expected to move. So in positive gamma, you expect them to be more stabilizing, and the prices need to go above the area where the gamma flip point is. And you can see that on some of the graphs and the matrices. But as a line on the chart, as a simple line on the chart, which is what mental Q does for people. God, DAX still pushing. That's nice. That's nice. Very, very drama-free, this failed auction. Kind of looks like the ES failed auction, only slightly less crazy from yesterday. But yeah, the market makers have to hedge in a positive gamma, and how they have to hedge anyways, but in a positive gamma, they will use levels with larger strikes to hedge because they need liquidity, right? They can't just go, oh yeah, I'm just gonna short nowhere or long in the middle of nowhere. They need to have a pretty deep liquidity pool in order to execute their positions, and they usually have one core position, which is either short gamma or long gamma against the investor's side, and then they will use their cash flow to actively hedge against the intraday moves. So this is why you're like, oh man, why did it reverse there? It reversed because usually there's an options levels there, and it's never random. Like very rare, maybe on a range bound day when there's not much volume, yeah, maybe the reversals would be random, but generally there's always some kind of a GEX level or something that they hit, and then they start to position themselves around it. So this is why it's important, I think, in this day and age, especially since we have so much access to all of these tools and stuff that vastly simplify the process of finding levels. So yeah, you can lose your eyes looking at the options chain or bar chart. That's free, barchart.com. But I always find bar chart a little bit tough to find anything, because it's like the options, you type in the options and it gives you like the random options, so you really have to like go down the rabbit hole to find the option that you want. Whereas MentorQ, they have bots that effectively take all of this data. It's almost like a utility bot, right? And they just plop it in as a line on the chart, just like a simple line. They have their indicators for all sorts of platforms, but I like to use them on TradingView because it's similar to TopstepX. And, you know, I would like to see the day when we do get sort of third-party licensing, third-party. This is like my accent's going weird because yesterday I was on fast markets with all of my American friends and colleagues. Do you find that? Do you mimic accents? Because I do that a lot. It's annoying as hell because people think I'm making fun of them. But I promise it's just... Alright, so DAX has traversed through quite a bit of this initial balance, and it's you know, now it's time for me to stare at how the orders are being created. So right now we're still good. We have consecutive green bars, but if the price makes a new high but delta doesn't, that will be some delta divergence, and then I need to close this out. But right now they're trying to pause a little bit. Let me just check the levels here. I mean, we do have GEX3 coming up around 260 on DAX. Now, there is a chance that silver, let's get back to silver, that silver settles around ADR high and then rolls back the other way, rolls over. That could be a setup if the time of day is right. But the time of day would have to be... Alright, so let me just take this DAX off because we are fighting. We are fighting. Alright, so I'm going to be taking 330 on this one, and what was it, 250 on the other one. So yeah, that's a nice sort of base hit to start the Wednesday. And now they are shaving off delta and also creating some red bubbles. They could carry on higher, but hey, I took like 70%, 80% of the initial balance range, so that's good enough for me. Right, so let's see what silver wants to do. Let's give you the natural gas levels as well, even though I think they're going to roll. Now, I've noticed with Topstep, sometimes they don't roll immediately. And I'm just going to have a look at whether they are going to roll. Because if it's going to roll, then we might as well just wait for tomorrow and NFP to be over. Yeah, so it's not rolled yet, but the January contract is 6K. They're gonna have to roll like soon. So yeah, I don't know whether Ostar Ricci says why silver not gold, because gold has gotten to a point where one 30-minute bar is like 200 ticks wide, 173 ticks wide on average. I, in the past, have not liked trading those kind of markets because I believe that it's very difficult to control risk. And in my personal account, I do trade full size only. Billy says, what do you mean by roll? So, futures contracts, basics. You trade the month by month, or in equities, you trade by quarter. So, you will have different months that account for different times of the year. But yeah, to get back to us, to Richie, gold has gotten to a point where I can't use my regular size and I would have to go down to micros. I don't want to go to micros, you know, and I don't want to use a 200 tick stop either. Because I just don't think that on most days, yes, it goes crazy and whatever, but we also have moments where the candles during COMEX are so wide that they account for like the majority or half of the amount of daily range. Now the daily range in gold is currently about 800 ticks. So if one candle is going to be 200 ticks, that means in two 30-minute bars, we're going to traverse more than 50% of the move, right? That's not a very good market for me. Now, that to me means high risk, but not necessarily high reward, you know? So I do not like trading things when I cannot position myself with like up to 60 ticks for those kind of products. And I've traded gold for 12 years. So I know that when it gets into those kind of waters, it's either getting super speculative because other people are looking at it that are retail. Now, institutional traders tend to be smoother than that, and I do think that first of all gold has come up so high, so it's gotten onto the radar of retail traders, and therefore it's exhibiting some highly speculative price action. I don't like trading speculative products for this reason, because price action tends to be a lot more wicky. It's not as smooth, so I can put these two side by side from like yesterday, because obviously today and today everything's just going nuts, and I'm going to remove these for now, and then we can have a look at gold levels, because I know most of you trade gold, but I don't like it. At this time, I might go back to it. Never say never, right? So if it comes down a little bit and gets a little bit normal. So let's have a look at yesterday's trade. So when was this? This was only the 18th. Let me just put the fixed volume profile. Okay. All right, so if we go back to the same area, right? Look at the size of the wicks. Actually, you know what? I'm going to remove this so we can see what's going on. And I'm going to put a vertical line for the start of COMEX. Okay. same time of day, right? So when you look at the sizes of these candles, you will notice that silver, yes, it's moving in a similar fashion, but it's actually making a better traction on the trend than gold was. Also, these candles on silver are maybe like 40 to 60 ticks wide, whereas these ones, well, we can have a look at them. Let's have a look at this one. This is a 30-minute bar with 270 ticks inside it. 270 ticks. And comparatively on silver, those kind of moves are about 60 to 70 ticks. So much more palatable, much less risk. And then ask yourself, are you advancing the trend? Because look at what silver did later. It pushed up towards the end of the day, and it does that. And look what gold did. Barely tackled the high. So to me, you get smoother trending moves in silver than you do in gold, even though gold has isolated moments now where it does go into a non-wiki trend. But, you know, even today, so look at how it's reacting from its GEX3, because there's a GEX3 level here. Right at the top, at 120. And then it's not advancing the trend again. And yet, silver made a really decent higher high, and it's just looking much smoother than this. So, which of these is doing better? To me, silver. Gold, not so much. But because of the size of the candles, people are like, oh my god, gold is amazing. It's not that amazing. Like, from the point of view of somebody who's involved in mechanical trading algorithms, gold is a very tricky beast because you can't limit risk on it without using a crazy amount of stops. Unless you're just going to shoot for like a few ticks here and there. I don't do that, right? So for my style of trading, I need to see smooth follow-throughs that eventually advance the trend in one direction. With gold, I find that there's a lot of push-pull, and it's just the whole thing is so dramatic that you barely get. Here's another example, so same time. So gold, really messy, really messy. Silver keeps pushing. I was actually in on this. I think I entered once we reclaim VWAP here. And whereas reclaim of VWAP on gold was just nothing. It didn't break any highs. In fact, it didn't even take out any highs. So here's the high on silver. So it's just not like, whenever I look at it these days, like especially in the last 3 weeks, I'm like, what is gold doing? It's like, what? So I think it's definitely because it's on everybody's radar because it's so expensive. Everybody thinks that it's an opportunity, and that's usually spells trouble. You know, this is how NQ got itself into this crazy psychotic price action that we see on it today. It never used to be that way pre-COVID. And then during COVID, it was still manageable, but then eventually that craziness just went even more crazy and then just stayed. Diminished a little bit, obviously, but yeah. So from my point of view, I like smoother products. So when I'm in a trade, I track how the trade is doing and how drama-free it is. And unfortunately on gold, I don't think I've had a trade in the last 3 weeks or even in the last couple of months, to be honest, where I entered a trade, there was no drama and just carried on. It was always like, oh, yeah, what are they doing? Oh, tape is like really messy. And then they pop it. And then tape messy, tape messy, tape messy, tape messy. And then carries on. Yeah. Now, let's tackle Billy's question. So, rolling into a new contract means that the So futures and cash, futures and spot have a relationship, and the difference between the spot price and the futures price is called the basis. Every time you see people in futures, they will be trading a particular month. And that allows the users and producers of those typically commodities, this is how it started, it didn't start in equities, it started in commodities, they will have a chance to effectively get their deliveries or their cash forward agreements for a better price, so to speak. And a lot of them will hedge in the cash and futures markets in order to kind of minimize their risk. This is especially the case for, somebody, I mean, both sides really, but I think the users, if they sell something for a particular price, they are now in danger of, at the time of the delivery, or prices being lower, so they will hedge in order to protect themselves from price fluctuations. And then the people who are using the products and the commodities, they will use usually like forward months to again lock in some of those prices. And sometimes they can make a bit of money on the hedge as well. So it's always been a part of the futures markets, and every month in commodities such as energies markets, they roll every single month. So 17th, 18th of the month, the crude oil and natural gas and RBOB and heating oil, they're all going to go a bit weird. Why? Because the volume gets split between the old contract and then what's going to become a new contract. So that causes slowness, it causes weirdness, it causes moves that still happen, but they're not really committed. Or you can have just a day when it's like watching paint dry. Just nothing, right? All right, so have a look at now how silver is behaving compared to gold. Which one of the two do you think is smoother when you're looking at them side by side? Which one is kind of advancing the trending move that they started from GEX2? Which one is advancing? I would say silver, whereas gold stuck at GEX3. And usually it wicks down and then maybe wicks back up and then ends up in this weird sort of wicky candle on both ends. I cannot stand being in trades like that because, you're not seeing the commitment on the tape, and yeah, eventually is going up, but it's just so much drama. And I don't know why people seek drama in trading. I don't. So yeah, this is why I'm choosing silver over gold. But yeah, this is an outlier. I don't know what's causing this, but usually silver and gold don't really pop like this every single day. Like maybe they move a little bit and then they kind of settle in a range and then they turn around. So this is an outlier. So if the ADR high gives way and it provides a little bit of a further push, it will become an orientation point in the case of an outlier day, but only if we manage to rise up reasonably above it, like about 20% above it, in the range of, in the relation to the range of the day. But if we cannot tackle it, and if we do settle in the barcode that usually happens at this time of day, it might provide a good opportunity to fade it after the LME opens. So sort of like 11:14 midday my time. Then we could look at some shorts. As it stands now, I don't have a setup, and although on paper it's like, wow, D, it's going up, I could jump in. That is not worked for me ever, right? I mean, maybe a couple of times, but in nearly 20 years of doing this, I've just gotten really wary of outlier days. And I usually wait like forever and a day. Why? Because they've hurt me before. On paper, they look so easy, right? Just write it. But how do you limit risk? Like, in order for me to limit risk, my stop, we need to be here. So unless we develop new structure, either up here or we get back down to this area, or maybe even all the way down here, it's been known to happen, especially for post NY cut. If there's a large option that expires in and around there, then absolutely it becomes a better trade and an easier way to limit risk. So to me, it's always risk first. It's like, how do I position myself and not break the structure of the market? That's the main question I want to answer. Do you sometimes look at the euro? I looked at it twice in the last 2 years. When I started trading euro in 2007, so it was a long time ago, it had 150 pips per day. Excuse me. 150 pips average daily range per day. Right now, it has between 30 and 50. So again, it's one of those products that kind of totally dried up after the European austerity measures. It's how I got into futures, actually, where I was only in Forex, and then across the board, when the European austerity measures happened, they had some volume at the beginning of the whole Greece going bust and stuff, but then after that, it just became a complete snooze fest. And for a year, I waited for it to come back, whole year. And then it never came back. So every so often I look at it, I see a 50 tick range or 40 or sometimes 34 ticks. And of course, you will have isolated days when it goes nuts, right? But they're isolated days. They're not something you can trade day by day. So no, on the intraday, I will never look at euro. I look at it for purposes of, like, if I'm doing some cash transactions or something, it's like, oh, what's the euro doing? But usually it will be euro pound or something. So yeah, to me, it doesn't have enough amount of tickage, which needs to be over 180. At the bare minimum, 180 is what I look for. And then generally for the full ADR, ideally 220 to 250, maybe up to 400. Those are my ideal conditions that I've realized over the years is something that my approach needs. And it also cannot be done all in one go. So, for example, the problem with crude oil, it's below that number, so it's like 100 ticks, like $1 barely. Yesterday, on Fast Markets, he was like, yeah, this looks like a great opportunity. And I looked at the overall session reversed, like in ticks, 58 ticks. So on paper, it looks amazing, but like, what are you going to get out of it? Like, unless you get in like at the very bottom or the top of that move, which is frankly realistically not that likely, okay? Probabilistically, it's just not likely. What are you looking at? You're looking at a 30 tick profit at best, maybe 50 if you got lucky, but I don't do luck. So for that same reason, anything that doesn't have a certain amount of tickage for a range is too low a volatility for me to consider it. What is GEX2? GEX2 is the second strongest level in the options market, where the strikes have a pretty large open interest, but is not as large as the call and put walls. And then the larger the number, the less open interests the GEX level has. So GEX stands for gamma exposure. Jamie says, how are you able to do the combine? You can trade combines to your heart's desire. You just can't convert them into XFAs until you either withdraw the live or you bust out of it. So I like to focus here because obviously these streams were supposed to be DAX, and then we never got DAX, and here we are for a year and a half, and still no DAX. So I've never traded metals for this time of the day. I usually trade them for COMEX. And I'm not going to be running my live account into the ground because you guys want me to trade this. So it's been, you know, a bit of a challenge, to say the least. Because I had to like turn to metals and stuff, and then the metals just don't do anything. Equities don't really do much. Again, isolated days, yeah. Things like this will happen. We have NFP, right? So this is probably like just positioning ahead of tomorrow's release, which hasn't been released for such a long time. So everything is going to go a little bit crazy. Also, Cedric is asking, are we in gold rollover now? Yes, it's starting, but it may not roll because technically the December actually expires in December, but they're already splitting volume. So I'm guessing we're going to have maybe an early roll. And gold, it looks like it's going to roll into February, whereas silver and copper are about to roll into March by the looks of it. So, and it should be a monthly contract, but the way the contracts roll is dependent on the delivery requirements of the producers and users of that commodity. So it's a little bit different. But yeah, to get back to Jimmy, so what happens with live account versus combines? You can still trade combines, you can still have XFAs waiting in the wings, but you cannot activate them, okay? So it's not that I'm doing this for nothing. A, I'm practicing. B, I'm basically putting, I always like to have XFAs in the background just in case, or in the case that you want to like drag everything down and start again. You can get yourself into a big drawdown, or maybe you want to put that capital towards your longer term investments. Maybe you want to buy something with it. It really depends. But maybe you just blow out. Maybe, it's happened. It's happened with a lot of us. It's like it's happened with Dakota. It's happened with a whole bunch of traders that I know. They're doing well, and then slippage gets them. Maybe they take out too many payments. Rafa did that. So he took out so much payment that he didn't leave enough buffer for the bankroll management. So yeah. But yeah, you can get and trade combines, you just can't activate the XFAs. So you can't have XFAs whilst you're in a live account. But yeah, it's always a good idea to have a few of them kind of waiting. And in the meantime, I get the chance to kind of keep trying the London session, or maybe someday if we get DAX, then I will be trading my live on these streams. Or if we move the show later, whichever one comes first, because at this point, I'm kind of stuck in a no man's land, and no DAX. Metals for me, I don't really have great setups for the London session in general. So just wait. GC is likely going to get stuck in a range for the next hour and a half, because it's already rejected GEX3. Now, silver is a stronger one again out of these two, already exceeding ADR. So let's have a look at where the GC ADR is. So these will be staying as an orientation point, either as a former ADR that you can use in a backtest, or in orientation for a potential reversal. So ADR high sitting at 41.47.5. Let's do that again. Need coordinates. So you can even see in the relation to how the move is doing that silver is already reaching its ADR, whereas gold isn't. So if they continue with a factor of 1 and we manage to break through the GEX3 level at some point, I would expect silver to extend even more. So that's kind of a correlation thing. And you can see, let's actually put the silver on the right and then put gold on the left. Why? Because I've got my face in the bottom left, and I want you to see this correlation quotient that I have down at the bottom. It is free. It comes with this. So you just go correlation coefficient. There it is. And then you need to attach it to a particular trade and symbol. And I attached silver to GC. So that gives me a correlation. Right now, we have a correlation of basically a factor of 1, 0.97. However, this is a stronger move. So that means whatever gold carries on doing in and around GEX3, it's going to have an amplified effect on GC because it's a smoother trade and it goes further in relation to its own volatility and range. Does that make sense? But yeah, So do I trade the same way during rollover? No, I trade less during rollover, a lot less, and I will only take the setups that are absolutely spot on. Whereas once we have the new contract, and you know, gold is great because it effectively has usually 3 months, 4 months before it actually rolls into a new month. So it's kind of like equities, right? Equities, you don't have to worry about the rollover, and it's a much bigger deal in equities than it is in, like, for example, crude oil and natural gas or RBOB, where you know we know the roll is happening every single month, so you can get like 3 weeks of really good price action, and then it all just goes horribly wrong. However, there's still setups to be taken. You just need to understand that maybe they won't happen as smoothly as you expected, like natural gas being a very good example of that yesterday. So look at how quiet it was. Like, this is like pre-market. Okay, we have a bit of, so we have a drop base, and then one drop base, turn around into a failed auction. So which of these was a less of a dramatic trade? This one, right? So that's what I took. But when did I trade it? I traded very, very late in the day. So I entered it in and around the euro close, or just after, when I was on fast markets, and then I waited. And then we retested the 425 level, rejected again, so that offered me an opportunity to scale in more. And then it ran to 3R and a little bit more, but generally I think 3R was somewhere here. So I took it as they were starting to sort of build some tug of war up here. And yeah, that was it. So did not expect too much, especially because this was all just initial balance. And whenever you have an initial balance that is fast and furious and then nothing, usually a reversal is going to happen. Same thing with DAX, right? Exactly the same setup. Smash, nothing, 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 reversal, whoosh. But you know, it's even DAX is probably a little bit tricky for people because it does the failed auction all in one go. So if you can't see it ahead of time, it gets a little bit difficult to get involved. So how do I approach rollover? I get even more selective, and that means maybe not trading on some days, like Monday. No trades for me. I looked at everything that I trade, and I was like, well, this looks shit. So I went and walked my dogs. I went to get some groceries, and then I played some video games, and that was about it. That was my day. So no trades. Why? Because I don't want to be trading when it's all like, you know, you enter a trade and nothing's happening, and nothing's happening, and nothing. You're like, come on! And then I start to lose my patience with it. It's the only time I lose patience, when I'm in a trade and literally like 2 hours later nothing's happening. That's my big mental trigger. You know, just like anyone else, I like my trade to go into some profit. If it then starts to consolidate above my entry, I'm fine with that, or, you know, outside of my entry. But I just don't like it bouncing in and around like 5 ticks, 10 ticks, -5 ticks. So like it drives me up the wall. Sometimes if I feel that we are going to have a pop, I won't watch it. Like, I'm just gonna have my base position there, and then I'm gonna walk away and come back for the time of day when I'm expecting the next pop to happen. And for this one, because I entered around the euro close, and very frequently they will consolidate. Oh, somebody's in a rush. Then they will frequently consolidate until the day range fill time of day. So I know my energies really well, and I'm not freaked out by them getting quiet for lunchtime because I expect it, right? But that doesn't mean that I won't try an entry after the euro close. But if I'm entering right after the NY cut, which is like 3 p.m., 9 a.m. Central, 10 a.m. Eastern, I want that trade to happen immediately. Like, you know, I don't want to wait. But if I'm trading slightly later, there's less volume, and then the next lot of volume is only going to come in for the closer to the settlement of NYMEX. I have another question that I missed. Would you have suggestions on reading material to comprehend core put was Vanna from a charm? I don't even know what charm is. I've heard of Vanna recently, but I don't get that deep down the rabbit hole. But I would definitely suggest Tom Sosnoff, and I would suggest Mentor Q as well. Now, Fabio asked me to be on Mentor Q on the webinars because we do know each other, so every so often I go on their channel. That's going to be somewhere around the Thanksgiving dates. I'm just going to have a look because I have it on my calendar, but remembering all these things is a bit difficult. Let's see. Oh, come on. Honestly, what have they done with these emails? Like, you can't find anything. Nothing. Right, it's going to be 25th of November at 11 a.m. Eastern. So that is 4 p.m. my time. So 25th of November. If you want to pop in and chat to them. So I don't trade, to finish up Cedric's question, I don't trade the same in rollover. I trade a lot less, and I'm even more selective. So just because, you know, I'm not seeing anything in particular. All right, let's get back to gold and silver situation. So right now, gold is definitely consolidating below GEX3. Did I not say that it's going to get stuck in a range? Like clockwork. Like clockwork. It's just what it does, right? It's not really the time of day for it to be super lively. So kind of goes some days like these, it kind of goes really quickly in one direction, and then it just smacks into a GEX level and then stops. And then you don't see either a continuation or a reversal, usually a reversal, until much later, like sort of 2 hours from now. And, you know, if I was a scalper, I could, you know, put on my Dolby hat and then just mark up a range and scalp. But my God, that just sups all of my mental capital. So I can't do that. Yeah, Desmond says, GC was such a clean break from IB high retest, but I don't like breakout trades. Feels rushed. Feels like FOMO trades. Yeah, absolutely. I 100% agree with that. Baba, did you not see my DAX trade that I did? Like we can't trade DAX, but I did a DAX trade. So please go back and have a look at the failed auction trade that I did on my account. Gave you the entry, gave you the partial, and I told you what I was looking at, and I told you when I exited. If you don't like it, go somewhere else. That's all I have to say. But the levels that I give you here, guys, never mind the half troll that we have, the levels stay for the entire day. So it's not like, oh yeah, there's not much trading going on. There is trading going on, just maybe not right this minute, right? So if you have a problem with that, just go somewhere else. Stop complaining. I'm not going to be doing like a million trades. I do like 3 to 5 trades per day. That's it. So if you want someone who's clicking buttons, then maybe this stream is not for you. Yeah, so further thoughts on DAX. So Ahmed is asking. Now, after the 4 big days that we've had, like massive down days, I would not be looking for further shorts. So another trade setup that you might find useful would be that if we go into an extension to the opposite side, yes, it will be a neutral day, but it is a equity product. So bounce from VWAP could definitely be a choice into a value acceptance and then a full rotation through. It's well within the day's range, right? So only if there's like semi-apocalypse going on. I don't know what Trump was doing yesterday. I kind of caught the end of it. But yeah, so some points to keep in mind. Value low could bring a reversal, and that's at 23,303 on DAX. Full value rotation would be around 23,400. So you can write these down. And I'm preparing our utility Discord with these levels and session ranges. It's almost done. It's almost done. Just want to get through the roll, because then I have to like change the products. But yeah, it should be another week or two. So ADR high on DAX is 23,536, and ADR low is 22,856. Now, DAX also has average session ranges, so because this is its main session, so they become more relevant. And the ASR high is this blue dotted line, just under the value high. So that's 380. And we're dead in the middle. We're just literally chopping inside the initial balance. And then the ASR low is 23,040. So yeah. How do I calculate ADRs? They are dynamically calculated with each either session high or low, and then you go plus minus. I can't tell you any more because there are proprietary sides to it, and my business partner is going to kill me if I divulge that. But basically we have a certain weighted average that goes into that calculation. And yeah, but they're pretty damn accurate. So, and if they get overshot massively, they can be used on a back test as well, in some occasions. But you need a pretty strong trend. Like if you're looking at copper and you're trying to use the ADR on a back test, that's not going to work because it's not in a trend at the moment. But you know, gold, silver, they definitely are. So it becomes a more valid strategy. So there's obviously context to it. And you can either trade to the ADR and ASR or from on most days. And then sometimes, like I said, if it overshoots, it's a good bounce point. What an outlier day. And it, you know, usually you have to have a decent pullback down to there. And then if they create some more structure, that gives you structure to limit your risk. What do I look for in a trade? Singles and doubles, primarily. Only if we're coming away from a massive area, and I noticed that there's a possibility in like volume and conviction of the move, then I will expand that. But usually I look for 2R multiples. So if I'm risking 40 ticks, I'm going to get 80. I will take it off at 1.5, 1.7. So anything over 1.3. And I'm happy. But I do try to only get involved in opportunities that have a minimum 2R multiples to them. Like just by looking at the chart, there's nothing in the way. There's no congestion areas, just to make it like a little bit smoother. So yeah. Tori, yeah, I saw the Trump pumped the markets. Crude oil went a bit nuts, but I don't think they sustained that. And this is why I hate being long crude. Let's have a look at crude oil. Yeah, so that's it. Now this looks like a big range, right? Like a massive range. Crude oil is rolled already, so I need to grab some new levels here. So the new gamma wall is 60.75. Guess what? They smacked into it and went straight from it. It's actually stepping into some negative gamma territory. So maybe short RBOB might be something to look at today. But yeah, this move, it looks big, right? It looks big. It's 150 ticks, this entire move. To compare that to gold, gold does that in a single 30-minute candle. Over that, 200 ticks. And crude oil over hours and hours, and with Trump and Saudi Arabia talk, only managed to pump it up 150. It's like, this is not the crude oil that I know and love. And like I said, Hoop said it a couple of weeks ago or last week. He misses it. He misses the old crude, and so do I. It was my main market, and suddenly it disappeared, which is, you know, a big lesson in why you should always have like a backup product that is not a part of the same asset class. Because the volatility changes over time. You change, you know, you trade long enough, and you will come up at some point. Let's see what our RBOB levels are. And again, it's rollover, so it's a bit tricky. Let me just put your value areas on gold as well, because I know people like gold. So. I'm just going to compare where the gold levels are. And this is COMEX levels, so I use values from COMEX. I look at LME value as well, if there's nothing too obvious elsewhere. So value high from yesterday was 40.77. Basically the same on the value high. And value low 40.58, just underneath. A few ticks out, so 57.6, and this one is a bit higher. So really not too different. Few ticks out, but nothing major. And if we hold above here, gold is actually opening, if we don't move higher from here. Gold will be opening COMEX at these levels at about 0.8, 0.9% of distance from value. That's actually pretty perfect conditions for mean reversion. And the fact that GEX3 is causing some trouble, that could be a good setup for later on. So fading it, if GEX stays. Now, if we go higher than that, it's going to be too high up. So anything over 1.25% distance from the previous day's value edge, it becomes too big of a day. So anything over 41.30, and you're likely going to have chances for a pullback and a continuation, maybe even a range day. So keep that in mind. Topstep still hasn't rolled RBOB, or like it's rolled crude, but it hasn't rolled RBOB. That's a shame. So yeah, let's wait until that's all finished. Because I like to look at crude oil and then express. I still trade energies, but I don't like trading crude oil. I like trading RBOB, which is a derivative of crude oil. So let's see if we can maybe find some kind of a trade there. See what it looks like. Right, so it's tagging the value area at the moment from yesterday. I'm just going to put in the COMEX fixed range value, and it starts from my 2 p.m. And then I like to put it all the way there. So that's what we had. And since this is the only one that rolled, I mean, it's still inside value, isn't it? So I don't know. It's all a little bit tricky. I really don't like trading during the rollover. It's horrible. Cedric says, I took a gold trade during Globex Open. Long 2 MGC, retest of the open to be stopped at break even. Probably not managing with my stop loss. What kind of max stop would you use with gold and ticks? Well, right now, nothing because it's so massive. But the way I calculate my stops is to do with the average session range and then dividing it by a certain number to obtain the stop loss size. However, Coach Paul has a different way. He drops down to a 5-minute time frame and then looks at the ATR number. Let me just remove my face for a second and then I can show you that. So you will see that at the moment, and you know, he uses the ATR of 14, and then he uses double the amount of whatever the ATR over the last 14 bars are effectively what you're looking for. So 44 times 2 would put you at the minimum stop loss of 90 ticks. Now remember that that number will change the closer you get to COMEX when everything goes a little bit nuts. So just keep that in mind, because that will increase. And I've seen it increase to 143, 173, 200 ticks. It's insane. So, but that will be a good way. So 2 times ATR on a 5-minute chart, 14-minute period. Now, if I'm doing this, I will be using a slightly different way. And it kind of gives me a similar way of the way I like to calculate it. So I like 9. And then I use a 30-minute bar. That tends to give me more room. So I only use one bar. So right now that's 115. And that's London session, right? That's a quieter Asia and London. And then if you look at COMEX movement and ranges, here we go. This one came up to 262. And let's see what happened on the 5-minute chart yesterday. So there it is. So in order for you to use Coach Paul's scaling to the volatility of the product, so 2 times ATR would also mean 200 ticks, because that's the high end. So 95 times 2, 200 ticks. It's insane. Absolutely insane. Right, let's get back let's get my face back in case you got tired of hearing me talk. Next question. How do we measure percentage of movement? There's a great tool for that, believe it or not. So if you go to forecasting and measuring tools, so it will be 1, 2, 3, 4, 5th down on this tab. You go down, it says price range. So click that. And then when you start dragging it, it's going to give you 2 things. It's going to give you a percentage of the move. And it's also going to give you points and ticks, which is a really good tool. So I have it in my other main charting platform as well. But it's great. So you get percentages, you get points, and you get ticks. Very, very useful. So, Joe, that's the tool. But if you're using my charts, you click on the middle mouse button. So if you're using MetaTrader, so click like this, and then you drag it, and you will see the same thing. It gives you points and percentages. So in my this is actually a better tool. Bit trickier to find though on TradingView and TopstepX. A bit tricky to find. They kind of smushed it into the forecasting and measurement tools. I mean, it is a measurement tool. I do agree. I just kind of wish that it was kind of attached to the crosshair. It's my only beef with it, but it's a great tool. HBX says, are these derivatives you're trading move congruently to crude? Yeah, so let's chat about how RBOB and heating oil are connected to crude. They are actual products that are derived from crude oil. Like natural gas isn't, it's a different commodity, right? But these two, they need crude oil in a very specific ratio to create, a refined product. And that is why they have a huge connection to crude oil, but they're also more volatile. And I like that. RBOB is kind of like crude oil used to be. I've never really traded RBOB much back in the day. And it's probably because it was absolutely crazy. Crude oil used to move confidently about 300 to 400 ticks per day. Nowadays, RBOB moves 300 to 400 ticks per day. That's probably why I resonate with it more. And then heating oil is similar, but heating oil on live account is really difficult to trade with size because it's super thin, even during the regular trading hours. It's not a speculative product. You will be in heating oil because you have to be. Now, let's try a little short somewhere, because I can see that gold has decided to reject the GEX3, but I'm not going to do gold. I'm going to do silver. Now let's get the dome back up. I can't trade without a dome. Just clicking on the chart. I don't know, I've never done that, so too old school for this purpose. So I'm going micro silver, and I'm going to slightly drop to the 2-minute time frame. Now I'm not liking the tape right now for short in silver, because that needs to change. But gold is definitely rejecting. However, the correlation has fallen off a bit. Now, what's 30 minutes saying? Yeah, so it's kind of dropping a little bit. They kind of went back up, dropping a bit. Let's see if we have a range of some sort. Is this a range? Maybe. So if I want to do some shorts through the ADR, I would like to see it maybe give me a move towards the high of this area. So tiny little area, and what would be the stop here? Let's use the forecasting and measurement tools. So stop loss. Yeah, so we could trade this on like a 50-tick stop. If I get a better trade location, maybe from the middle of this range, so just a little pop higher, if it gives me. But otherwise, right now, to kind of avoid getting my stop above the high, maybe a 60-tick stop would be in order, just so that we can have something to look at. There we go. I have a 65-tick bracket here. And there was a 41 lot there on major silver. Somebody big just shorted it. I have a large lot indicator. So I'm just going to split this into 3. Whether they actually do it, like whether they actually keep going in. Right, so Delta made a new high, but the price did not. So again, a little bit of Delta divergence there. Not massive, just like a tiny micro event that could push this down. We also have ADR high. That is a high probability level for shorts. The position size has to be smaller because I am only in with one because of the 60 tick stop, 65 tick stop. So I do not want to risk more than 350 on any trade in this point of the combine. You know, you can go a little bit more aggressive in the middle of the combine, but not towards the end, because then you ruin all the profit, right? So let's see how far down this gets. All right, tape's looking all right. So there's that large lot of 40. And again, you won't be able to see this on a micro because the big boys are always in the big charts. All right, so we have a little bit of structure here now. And now we will need to see a committed move to the downside, which may not come right now. We may chop around. And then after I'm done with the stream, the closer to the LME we get, we may get that pullback. And then once we're somewhere in this area, I might consider a live trade. Yeah, so they're swiping it to the upside a little bit. Smushing people, scaring people, boo. So yeah, this is probably going to be a range. All right, so we have something to look at, right? And let's also drop down to a 5-minute. Just going to find the highest volume candle here. And I'm going to attach a VWAP to it. There's anchored VWAP. If this holds, I will probably have an early exit. But if we break down through this high volume candle VWAP, then this could be a decent roll to the downside. So the sweep upside that they've just attempted failed. It just went whoop, 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 whoop. Not to say they won't push it back up, but I really want the price to go below this anchored VWAP and close below it. Otherwise, this is a continuation. So the only reason why I'm considering this is because gold is hitting the GEX3 level and trying to reverse. And we've hit ADR high on silver, which is a statistical quantitative extreme, and will only properly break in case of an outlier day. So it's a fairly good trade location to try something like this, but the time of day is wrong. So I don't have one condition that I would need in the live. So let's see what they want to do at the point of a previous high volume average. We have a minor GEX level here. It's a GEX6, so anything can happen there. Suspense. Suspense. And yeah, this could look like a bull flag. Look at this, but just a trade location here. And also the fact that, you know, London likes to fail the auctions a lot. In this case, it will be more of an auction fade because we have some single prints down below 51.87. So if I can I attach? So I'm going to attach a current day profile for London. Don't know whether you can see single prints on the volume profile. I really don't. We'll find out. Don't think so. Yeah, see, you kind of can. It's not the same as the TPO, but you can see that this was a thinner volume area. So that can create a weaker structure in some situations that will be revisited at some point in the day but maybe not. Maybe not here. How do you check delta? On Bookmap. So Joe, if you're on my, I know you're on my YouTube, right? So look at my Bookmap settings, and I talk about cumulative volume delta. So it's this thing here. It's in the studies config. And then I attach it to the start of the session of whatever I'm trading. So it's either going to be London or, so it kind of accumulates. It's not a time period. So it's not like, oh, in a 5-minute delta is going to be different than on a 30-minute. It does accumulate over time, and then it nets out the aggressive buyers and sellers and then gives you the final number. So obviously we are pretty heavily positive, but again, the level here is a little bit tricky. And they're running out of steam, you know, so if they manage to, for now, that could change, but if they manage to go below this highest volume candle in a lower time frame, that will give me more conviction in the trade. So for now, it's just a guess that we're coming away from ADR high, and then we're going to have a pullback. So I'm trying to put the mean reversion D outside of the room, but on this occasion I think she needs to come back. Yeah, take off the duct tape from the mouth and say, yeah, mean reversion could be on the cards here, purely because of the level that we're coming from. So yeah, if they're gonna go all the way down, probably not. It's a difficult one. Single prints could act as a stopping point, so I need to be very, very aware of that. So therefore, the edge of the single prints on the TPO profile is 51.86. I'm looking for this, so 51.86. And then all the way down, I mean, it's a massive area. To 51.346. So all the way down here. Do you know what? I'm just going to put a line because I don't like to pollute this chart too much. So I'm going to say single print high. It can kind of act as a demand on in some cases. But basically this entire area is game for a single print fade if we get that. Again, metals are so strong, so I don't know whether we're going to get that. Yeah, by the way, Joe is one of my personal coaching people, one of my market stalkers. It's good to see you in here. So we seem to be bouncing from this VWAP. I still have 2 minutes before the 5-minute bar closes. If that closes above, it basically gives me a reversal from this anchored VWAP. I will be out. So as somebody who's naturally a mean reversion trader, continuation trades are very difficult for me. So could there be another long here from the bottom of the range? Yes. Do I want to enter it? No, because I have a better level down here. Is it a scalp? Yeah, probably. But yeah, it's just not the time of day for me. It's like I always find the tape is a bit, it's lying. It lies at this time of day. 1:47. Whoa, I've gone over time. Okay. Time flies when you're having fun. So you see, now I kind of want to see what happens with this. But I have to finish the stream, unfortunately. Been talking for the world. But yeah, let's do this. Let's just put this and look at this anchored VWAP, how the price behaves. Look at the single prints as the next orientation point if we get there. And then use it to figure out what sort of price action we have at the time. I mean, for now it's going okay, but I do have to finish the stream, so unfortunately I won't be able to stay here with you. If we ever get the change of the show time to start now, we'll be able to see how these trades play out into the LME. But unfortunately, I have to go now. You will see me obviously tomorrow for the Euro trade, but also tomorrow for the group coaching. If you have any questions about anything that I'm doing here, so GEX levels, psychological tips and tricks. I mean, I'm not a psychiatrist or psychologist, but you know, I have been doing this for long enough. Then join us tomorrow for group coaching and post your questions. Bring your questions. That's all I have for you today. I will keep tracking this little trade, then possibly trade live later on. But yeah, thank you for being here with me. I appreciate your time, spending your mornings with me, very early mornings as well. Until tomorrow, I will bid you adieu. And let's try to be less grasshopper and more market stalker. This was the Euro Trade on TopstepTV. I'm Market Stalker D, and I will see you very soon. Take care.